So hello everyone. My name is Mark. I am one of the traders here on this group, and well, today I'll just thought I'll give you guys a little rundown of what I'm looking at for the week ahead, or a few weeks ahead. Um, just so one, you guys know how I trade, and you guys um can hopefully follow along while I and hopefully analyze it. If I post a trade through, you guys can kind of analyze it and see for yourselves what I did and what I looked at, and hopefully you guys can learn something from it as well. So getting straight into it. So with gold, XAUUSD, which I don't really post on the Signal group because the barriers to entry or the expense to trade gold is quite high. So one, it's very volatile. It's a very volatile market, and two, each pip it goes down by is like 10 quid per lot size, so it is a very expensive market to get into, but I'll show it anyways just so you guys can have a rough idea of what I look for when trading, and hopefully you guys can see that as well if I when I post and a trade on any market. So first of all, gold. What I'm looking at right now is this huge bearish momentum to the downside, followed by a retracement up. This could straight away just show us, just give us an idea of a selling opportunity to continue this momentum to the downside. Secondly, on the weekly time frame, what we can see here is a huge consolidation on this market right now on gold, with the occasional break below, finish back above. As you can see here, it broke below, then quickly finished back up above. Same thing happened here. So it broke below, and then quickly finished back above this area right here of from 1823 to 17. Let's call it 55, right? What happened on this around November time was it finished very impulsively above, but quickly finish back down below again. So at this point, I think we're starting to see a pattern of gold is just consolidating. So what we can do is just trade in between this area right here. It's better to trade with the market rather than trying to make something new, like a break above and go into new highs or something. If when the market's doing this, especially in the higher time frame, it's a lot easier to trade, just because it's a bit more predictable. Right, for the daily time frame, um, what we can see here is obviously this area of resistance at 1833. I think it was, I said 1833. Yep. This area of 1833 or 34 is quite a huge area of resistance, but when marking down area of resistance, it's not a good idea to just make it as a line and that's it. It's good if you're trying to do pinpoint accuracy analysis, but um, it's it's best to make it an area so it's a lot less so there's a bit of leeway and get because the market is never perfect. It's never just gonna hit the same place twice exactly, but you can give it a bit of an area to just give it a bit of leeway and you know um, just letting the market breathe and make it do what it wants before you try to execute. There we go. So um, marking this area down as some sort of major resistance to the gold market around 1834, or the lowest area is 1829 there. So now that's what we can see on the daily time frame. And also you can see as we go lower down, we can see how really impulsive this move was, and then the consolidation up. So you can see here, this is a straight down, and this one is just gradually going up, making higher highs and um, lower lows. Sorry, higher lows and higher highs here. Um, and as for the 4 hour time frame, we are starting to see some sort of structure in the market. So first of all, this area, this channel right here, It's holding quite well. Obviously, it did break below it, but it finished back up above it straight after that. So we can just chalk this up as some sort of liquidity grab from the market. Maybe it was done by news or something. I can imagine this was probably news, and then it finished back up above. So um, yeah, so as we can see here, it's moving quite consolidated. It's consolidating rather than impulsively moving. Next up is this channel above it. So now we've form a bullish flag almost, and from what I've back tested, is bullish flags tend to get broken after the third touch. So what would happen is a bullish flag like this, one touch, two touch, and then after the third touch it does collapse. So that's what it tends to happen. It's not perfect, but it is a theory that I've come up with while trading the market for a few years now. So next we can expect this price to collapse in itself, to go down potentially down to these sorts of levels, unless these sorts of lows hold right here. So unless if this doesn't get broken here, we can expect price to continue up, trapping the sellers looking to sell around this level, because without even looking at it, I can imagine that this is going to be a 61.8 retracement. To be honest, it's probably going to be a perfect 61.8 retracement. Yeah, so it's around a 50% retracement, and this one's a 61.8 retracement. So I can imagine a lot of sellers being trapped between these two levels, trying to sell it, and now they're in drawdown. So unless these lows get broken, we can expect price to continue up to potentially these sorts of highs of 1829 here, as marked down here. So 1829, 1828, that's what I'm looking at if these lows don't get broken. But if they do get broken here, we can expect its price to go down to 1790. 1790 to capture these lows here is probably the safe bet if it does get broken. So yeah, let's say this price does go back in itself. So let's say this candle does go back in itself. That'd be a great signal to continue selling, and probably the momentum is probably going to carry itself to break these lows. And when these lows get broken, a market signal, not a market signal, but it would be a signal for loads of traders to continue to sell from this level, and then just becoming a snowball all the way down to grabbing these lows on the left here. So yeah, but again, if it doesn't, I'm not going to trade the buys to these levels. It's not worth for me, because I'll need to wait for a retracement, make my stop loss really, really small, and then there. But if I wait for the sells, it's slightly more worth our while. So I'd probably put the stop loss just above this area if it does go back below it, and then target obviously these lows, which is a 1 to 4, which is a bit more worth than a 1 to 1 or a 1 to 2. Trying to get up to 1829. So yeah, the next one we could potentially look at is, if it does reach 1829, is a reversal from this level, back down to previous levels, as I said, down to 1790. But we could see a break of these highs and going to the upper end of our resistance level here at 1834 before collapsing. So it's just a few areas that we need to be looking at before we execute on a trade here on gold, just to keep our win rate and our probabilities high. So yeah, so that's normally what I look at when trading, and that's what I think about before putting a signal through onto the group chat, whether this is the best probability wise, whether this is the best trade, or if we can wait for an even better trade not too far from the present time. So yeah, so I hope you guys have learned something from this little trade analysis video, and yeah, I hope you guys have a great day.